everybody, this is Lara with your weekly video for US oil for the week ending Friday the 13th of January 2023. This week price has moved higher. It has a little bit of push from volume on the weekly chart, but not for the last two sessions on the daily chart, and upward movement has not broken above resistance at the upper edge of a channel which is long held and contains a big bearish movement. There's a series of lower lows and lower highs. That is the basic definition of a downward trend. While that remains intact, we should assume the downward trend will continue. If we see a new high above 81.49, then that series of lower highs would be broken and we may have a trend change. If that happens, then the alternate wave count would become more likely. If that happens, our target for a bounce will be 116 to 105.57. But while that hasn't happened, assume the trend remains the same, down, until proven otherwise. Our midterm target remains 46.33. Elliott wave first, classic analysis last. On the weekly chart, my Elliott wave count sees a supercycle degree second wave double zigzag over here. When 2 ends, 3 begins. Supercycle 3 may only subdivide as an impulse, which means cycle 1 must subdivide as a 5-wave motive structure, and this subdivides as an impulse with primary 1, 2, 3, 4, 5. Fairly typical of commodities, oil has ended this bullish movement with a sharp upward movement and a blow off top. When commodities do that in Elliott wave terms, that means that the fifth wave is the strongest piece of movement, and the strong fifth wave of intermediate 5 has forced intermediate 4 that came just before it to be more brief and shallow than its counterpart second wave, giving primary wave 5 a 3-wave look. This is fairly typical of commodities, although this is a pretty extreme version of it, but it's pretty obvious now with the size of this resulting movement that this movement is too big to be considered another correction within this trend, and this trend is over, and so I am labeling this as cycle wave 1, a complete 5-wave impulse. One of the core Elliott wave rules for an impulse is the second wave may not move beyond the start of the first wave below 10.24. This channel is copied over from the monthly chart. Elliott wave is fractal. You have to fit the weekly chart into the monthly chart. You have to fit cycle degree into supercycle degree. I link back to previous analysis where I update monthly charts with text, charts and video for you once every couple of months. So to see how this channel is drawn, go back and look at it on the monthly chart. As price approached, resistance was found, moved down and away, broke through finally, came back to test support here, and then here with a little overshoot back in, and another test here, almost perfectly finding support at that trend line. So this trend line has reasonable technical significance. I'll expect it to continue to provide support in coming months, and it may show us where cycle 2 finally comes to an end. Cycle 2 is most likely to unfold as a zigzag, and that will be labelled A, B, C, and zigzag subdivide 5, 3, 5. It looks like A was relatively short, B complete, and C may be expanding, with intermediate 1 over here. Intermediate 2 may or may not be over here. If it continues, it may not move beyond the start of 1, above 123.68. Let's take a look at the daily chart. We're going to look from the high of primary wave B here, this point up here. This is our first main Elliott wave count that assumes the trend remains the same until proven otherwise, where we have a series of lower highs. Well, this one's slightly above this, but a series of lower highs back to here and lower lows. We should assume the downward trend remains intact. If we see a new high above 81.49, that series of lower lows and lower highs would be broken, and we may have had a trend change. And in Elliott wave terms, that means that within minor 3, no second wave correction may move beyond its start above 81.49. That would also see a breach of the upper edge of this channel, which contains all of primary wave C so far. It's a base channel. I've drawn it from the start of intermediate 1 to the end of intermediate 2, placed a parallel copy on the end of intermediate 1. Lower degree second waves usually, not always, but usually find support or resistance at the edge of the base channel on the side opposite to the trend. So the trend is down, so the upper edge should provide resistance for lower degree second waves. Within primary wave C, this wave count has intermediate 1 over here as a leading contracting diagonal, because people often ask this question. Within a leading diagonal, subwaves 2 and 4 may only subdivide as zigzags. Subwaves 1, 3 and 5 most commonly subdivide as zigzags, according to Frost and Prechter's classic, the gold standard for Elliott wave rules, Elliott wave principle. You can buy it on Amazon, or you can buy it on their Elliott Wave International website. It's the book that you should it's the book I used to learn Elliott wave many years ago, and my own book, Pure Elliott Wave, does not rewrite any rules. Well, it's a guideline how the waves subdivide. I've written it as a rule, but I haven't changed the meaning at all. And so subwaves 1, 3 and 5 of a leading diagonal most commonly subdivide as zigzags. That's why I have minor wave 1 labelled A, B, C. This is a zigzag within a leading diagonal. Following a leading diagonal in a first wave position, the following second wave correction is normally very deep. Here, intermediate 2 is relatively shallow. It's closest to the 0.382 Fibonacci ratio of intermediate wave 1. So this part of the wave count hasn't followed normal behaviour following this structure. And the other problem with this wave count is the structure of intermediate 2. It's a double zigzag. First zigzag in the double, labelled minor W. The double is joined by a 3 in the opposite direction, labelled X. The second zigzag in the double, minor Y. Two problems. Minor Y doesn't fit as well as a zigzag as the next wave count can see it as a different structure. So this is slightly forced, this structure. But the other problem is minor Y has barely moved beyond the end of W, and the purpose of a second zigzag in a double, or the second and third in a triple, is to deepen the correction when the first zigzag doesn't move price deep enough. This has barely achieved its purpose, and so the probability of this wave count is reduced, and I consider the alternate has a reasonable probability. This is the main wave count because it has more support from classic analysis at this time, and because it assumes the trend remains the same. And so those are the problems with this wave count, and that's why I keep saying seriously consider that alternate. I judge this main wave count maybe to have about a 60% probability, and the alternate maybe about a 40% probability. Intermediate 3 may only subdivide as an impulse. The target is for it to reach equality in length with intermediate 1 at 46.33. That's the ratio I'm using for the target because intermediate 2 was relatively shallow against intermediate 1, and it fits with the expectations for primary cycle 2, to find support at the upper edge of that channel on the weekly and monthly charts. Within intermediate 3, minor 1 may be a complete impulse, minor 2 a zigzag, minor 3 may only subdivide as an impulse, and within it no second wave correction may move beyond its start above 81.49. The alternate is identical to this point down here. This point down here, still seeing intermediate 1 as a leading contracting diagonal, but now instead of intermediate 2 over here as a double zigzag, what if it's continuing further as an expanded flat in order to be much deeper against intermediate wave 1? This is absolutely possible. Expanded flats are actually fairly common structures. They are labelled A, B, C, and an expanded flat subdivides 3, 3, 5. And so we see this movement as a 3. It's a zigzag for minor A. Minor B, a 3-wave structure, is an expanded flat, A, B, C, and now we can see this move up here as a double zigzag. And this has a really good fit. This piece of movement has a better fit on this wave count than it does trying to see it as a single zigzag on the main wave count. Just quickly popping back to this main wave count, I can't label minor wave Y. I can't label this a double zigzag because that would violate an Elliott wave rule stating the maximum number of corrective structures in a multiple is 3. And so to label any of W, Y, and if there is one Z as multiples means you've got multiples within multiples multiplying the number of corrections within the multiple beyond 3 and violating the rule. That's the most misunderstood or completely ignored Elliott wave rule, and if you see work with WXYXZ labelled within WXYXZ, ignore it. It just doesn't understand Elliott wave rules. We're not that one anyway. And if you see WXYXZ overused in anything calling itself Elliott wave, just move on. It's probably not got any predictive value. This wave count expects intermediate 2 to continue higher and may end closer to the 0.618 Fibonacci ratio of intermediate wave 1, which is at 105.57. A little bit above that, at 116, minus C would reach 2.618, the length of minor wave A. This wave count expects overall weeks of upward movement for minor wave C to complete a 5-wave motive structure, must move beyond the end of A to avoid a truncation and a very rare running flat. Within this expanded flat, minor B is a 1.36 length of minor A, neatly still within the most common range for B waves within flats of up to 1.338. Intermediate 2 may not move beyond the start of 1, above 123.68. This week has completed a green candlestick. Upward movement has obviously dominated within this week and has some push from volume, so this is good to see for a bullish case, but overall volume is still relatively light. And when we look inside the week, we see some weakness at the end of it. So that's a bit of a concern for a bullish case. There's still a series of lower highs and lower lows. This is the basic definition of a downward trend. Let's assume this downward trend remains intact until proven otherwise. There is no bullish reversal pattern at this low. RSI didn't reach oversold. ADX only has just started to indicate a downward trend. There's a long way to go before this downward trend becomes extreme. At the weekly chart level, ADX still indicates a downward trend is in an early stage, and RSI and money flow still well in neutral territory. Plenty of room to go before conditions become oversold. On the weekly chart, no signal from on-balance volume. Stochastics also neutral, ATR declining as price moves lower, somewhat normal for this market. At the daily chart level, we see inside the week these green candlesticks have declining volume for the last 2 sessions for Thursday and Friday, so that's concerning for a bullish case and suggests there's a bit of weakness at the end of upward movement here. The previous swing high remains intact so far. On-balance volume gives a bullish signal, but it really is very weak. I almost hesitate to note it. This is a suspicious trend line. It's only got these tiny 2 little anchor points, and it hasn't long held, although it is horizontal. It has been breached this week by on-balance volume. So there's a weak bullish signal there. The moving average situation remains overall bearish. Here's the long, mid, short term. The short is positively sloped, the mid and long negatively sloped, price still below the long, and the mid well below the long, so an overall bearish look. ADX is now declining at this time frame. There's no clear trend. This little bounce within the ongoing larger downward trend has pushed ADX to decline this week on the daily chart. Stochastics, money flow and RSI all neutral. Stochastics reached oversold here as price formed a little pivot low. Moving back higher, Stochastics is not yet overbought, so from a swing point of view or a movement within consolidation point of view, there's room to go before Stochastics reaches overbought, but a decline in volume suggests we might not have much more upward movement. That's all from me this week with your oil analysis. I hope everyone's looking forward to an awesome weekend.